becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
Out of this cup of coffee,
welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me today is Anisha Jain. And for the next 1 hour, we'll be taking up all your stock queries and also on the Buy Now, Sell Now lens. Today, we'll be focusing on the IT stocks because the top boss of TCS has come up with a very bullish comment where going forward, he's expecting 2023 to be a turnaround year for IT industry. What that means for the sector, we'll zoom into that and get you more details on this particular sector overall. But before going forward, let's have a look what the markets are up to. Today, if we say it was a tepid start for the Indian markets, and now we are drifting lower. For Bank Nifty, it's a cut of around 300 points. On the Nifty, it's a double century loss with around 200 points of gains. And for Nifty index, we are now close to 18,200 odd levels. Let's see whether that support holds on for this particular index or not. But the breadth of the market is definitely on the weaker side, especially when it comes to the Nifty 50 index. Just two stocks are holding in green, whether it's Adani Enterprise holding a gains of around 0.7%, and the other counter that is still holding and near to its all-time high levels is Axis Bank. But on the flip side, if you see some of those metal counters, be it some of the life insurance companies, Autopac, majority of the sectors are under pressure. Hindalco, UPL, SBI, Live, Bharti Airtel and Eicher Motors are some of the top losers of Nifty 50 index. But if you see the advanced decline ratio of NSE, then that's surely in the favor of the declines. Around 700 stocks holding in green, and apart from that, 1300 stocks are drifting in the red side. But let's move forward and let's shift focus on the IT space. Anisha is here with us in the studio, so let's understand from her what's actually the commentary is looking like from the TCS management.
Oh, well, yes. Since I'm in the studio, I guess the talk had to be IT, right? Yes. So, as far as TCS is concerned, Rajesh Gopinathan has spoken, and it's been a while since he has actually spoken to media, and it's a bit of a dovish commentary coming in, and I say that because here he's at least acknowledging that there are headwinds, and 2023 is going to be a year of balanced growth, and that compares to the last 2 years where we have seen solid growth. So he's acknowledging the fact that there is going to be a bit of slowdown, a bit of normalcy per se, and perhaps the kind of growth rate that we had seen pre-COVID is something that is likely to return. That's my key takeaway as far as his commentary is concerned. Having said that, margin is something that they're focusing on this year because he believes 2023 will be a year of repair when it comes to margin. Because of the supply side pressure as well as attrition, we had seen that the IT service and the sector margins were languishing at multi-quarter lows. Now he believes that there would be a bit of recovery there. Separately, recession is going to be there, but the good news is, as per him, that it's not going to be an economic recession. It's only going to be temporary as well as a technical recession. So not a long-term hiatus is what he's expecting. Maybe some near-term slowdown, but not something which is going to impact the fundamentals of the industry as a whole. Separately, supply side issues are likely to remain benign, so that's the good news. He talked about how attrition has moderated and is now expected to go back to the pre-pandemic level, and that is expecting to happen by the second half of the year. And as far as the long-term target of $50 billion is concerned, that's likely to happen by 2030. We have been speaking with the management. They have been reiterating their guidance, and they're sticking to that, saying that we are a long-term player and we index ourselves to our long-term targets and not just the quarterly targets as well. So let's take the discussion forward with our guest on the show as well. Kunal Bothra, as always, joins us on the show. Plus, we have the fundamental experts joining in to help us resolve your queries and understand what exactly is needed to be done in stock-specific action. Rajesh Agarwal, the head of research at AUM Capital, will also join us. But before that, let's try and understand the market technicals itself. First up, Kunal, just a bit of a sense as far as market is concerned quickly. Trending lower, what should one do at the moment?
So yeah, trending lower. We've broken one very crucial support of 80,250 on the Nifty spot. And I think that could be an indication that possibly the markets can drift a bit more lower. The concern for the markets today, and a big concern I would say, is the rise in India VIX back again above the 15 mark, or it's just coming closer to that 15 mark level. I think if we manage to break that 15 level and close above this could probably indicate that this may be a start of a bit of a downward trend for the indices. So it's time to be a bit more cautious on the overall outlook and looking at the way India VIX is rising up.
Okay, so that's the take on the markets. But like we have been discussing about the IT space and zooming into that, let's hear out from ET Now's managing editor, Mr. Nikunj Dalmia, what he had to say and what's his view on the IT space.
TCS by and large is a bullish firm. So TCS by and large would like to paint a positive picture. Yeah. So I think that is very clear. See, what are we debating in the market? Nobody is debating the growth. We are all debating the rate of the growth. TCS has indicated that, look, they could potentially double by 2030, which means that a growth of about 10% for a double-digit growth, 9 to 10%, I think would be there for next couple of years. And that is what I think markets are positioning in for. The good thing for TCS of IT industry next year could be that attrition goes down and margins they go higher. But if margins they go higher, what happens to the growth? And markets are not convinced. Markets are not convinced as of now that growth will not get challenged because there are no large tailwinds for the sector per se. So it is more like an industry phenomenon based on previous experiences of 2008 and 2000. Every time global economy has contracted, I think IT sector per se has suffered. We are talking about a slowdown, but if 2023 could be a recessionary trend for developed economies, what could happen there? We also know that the scenario is strikingly different for the BFSI space, at least for the developed worlds, and Europe is not out of the recession. So while the sector per se will not have a problem on a big picture basis, the rate of growth, I think, will be a challenge, and I don't think these sectors right now per se are still a contra buy. Let's wait for the results. Let's wait what we exactly hear from the management.
Okay, so that's the deep dive into the IT sector, but let's ask Rajesh Agarwal as well what his take is. Rajesh, we have seen a deep correction across all IT companies, anywhere between 20 to 40%. For long-term investors, what should they do? Should they hold on to their position? Is it the time to perhaps add some more position? What would be your suggestion?
Good morning, Anisha. Good morning, Srishti. Good morning, Kunal. You said it right. For a long-term investor, this becomes a question what to do. And definitely, we have advised our clients to go long only if they have a time horizon of 12 to 14 months. Because in the short term, as Nikunj pointed out, the rate of growth would be a major concern. Yes, we also believe that attrition rate would claw back to pre-pandemic levels, as we have done our channel check and we have found out that already attrition rates have gone down from what it was 2-3 quarters back. There is a lot of pessimism in the market regarding IT space as a whole because of talks of recession and extended rate curve and all those things. But still we believe that with the kind of deal pipeline they have, and even today when TCS came out with the kind of commentary they have given for 2030, that is a quite positive commentary, I would say. I don't disagree that there is a bit of a setback and the correction may continue for some more time. But as you said, correction have been quite sharp in all those IT names, even the bigger ones like Infosys and TCS and Tech Mahindra have taken a sharp cut. We should not forget these kind of stocks come out with open offers, buyback offers, I would say. Buyback offers in every year, they give good dividends, and for a longer term investor, this is quite a time to accumulate these kind of stock. We have a buy call on Infosys, Tech Mahindra in the larger cap space, and mid cap space we have a buy call on Intellect Design.
Okay, so that's the fundamental take on all these IT counters, what's happening in the sector, and what are the top picks of Rajesh as of now. But Kunal, let me come to you. A very good morning. But talking of specifically the movement in all of these counters, we have seen a bit of a recovery from the September lows in majority of these IT names. But once again, they are drifting lower. Purely on the charts, if you have to recommend any buy recommendations on that side, what will that be?
Good morning. So I would recommend maybe Infosys or HCL Tech, I think, as the two top names from the IT pack. I think these stocks were these two were the stocks which led the first or the initial bout of a rally for the IT sector overall. These stocks were also the first ones to try and break past about their individual long-term 200-day moving averages. So I think there was a bit of a resilience and a leadership which had come back into the IT sector based on the performance of these two names, and that's where the confidence started to brew up into the entire sector. But I believe now that these stocks are still consolidating, going into a mild correction, it's a good opportunity to go for a buy on dip. So if I have to prefer two names, I would still prefer Infosys and HCL Tech.
Infosys and HCL Tech. That's the recommendation coming in from Kunal. But on that note, we are slipping into a very short break with the news that the market is drifting lower. And remember, it's in tandem with what's happening across the globe because the commentary coming in from Bank of Japan have been a tad bit tepid. And that's the reason the Dow futures have suddenly slipped as much as 300 points. We'll track that when we come back.
Is costing you 25 rupees right now. After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predict.
Welcome back to Buy Now, Sell Now on ET Now, and viewers, it's now the time to kickstart all your stock queries. But before we come to that, we have a very important question for Rajesh. Rajesh, coming to you, markets are not looking quite very strong, especially in today's trading session, because if you see all the sector indices, they are having good cuts on them, and not even just one stock is holding in green when it comes to the Nifty 50 index. At this point in time, what will be your advice for all the investors out there to protect their wealth?
You gave a very perfect question and a perfect market scenario, I would say. The recent sharp market volatility and the kind of fall which we are witnessing poses a difficult question for investors. What should I do? Whether I should average it out, whether I should sell everything, get out of the market, buy again when market falls. These are the two pertinent questions which haunts every investor, I would say. Faced with the kind of declining portfolio values, it's a natural instinct that investors come out with such kind of questions. But what I would like to suggest them is to act calmly and rationally. Sometimes it's better not to do anything rather than doing something or that every time. You don't have to run after every news. Stay quiet. Go to your drawing room. Bring out your portfolio and try to think, why have you bought these stocks? What kind of time horizon they had? Whether the fundamentals have changed for that particular company, then only take a decision. If it's a long haul, if you're bought stock for a long-term investment horizon, it's no point panicking for any bit of news coming. We have seen what happened in 2020 when market crashed and it didn't rebound. So these kind of blips are temporary. These happens every time in the market, so no need of worrying. There are moments when investor need not do anything. It's better to stay put.
Okay, so that's the advice coming in for all our viewers. But let's move on and kickstart all your queries section. Taking up the first query from Sujit, and Kunal, this one is for you. He wants to know your take on the pharma sector. Given the cautious view on the indices, what will be your advice for the pharma stocks and any particular stock picking out there for trading perspective?
So I think not too many stocks which are trading above their 200 DMAs for the pharma stocks. In fact, I think Sun Pharma and Cipla were the two names which were doing reasonably well for mid part of 2022, if I can call that. But then somehow I think Cipla and Sun Pharma both have lost their way, and these stocks have also gone through a correction. The likes of Divi's Lab, etc., these stocks are already going through a very sharp correction. I think the stocks have been very volatile. So it's very far and few that the stocks within the pharma stocks are looking very attractive. Now, I think the better way to try and trade the pharma stocks or the index as such is that wait out for the point where the pharma index breaks past about the 13,000 and the 13,500 mark. I think whenever that happens and the set of stocks which would lead the breakout, I think one should try and look out for buying opportunities over there. So rather than buying on dips, because these dips and this correction can continue for some more time, wait out for a point where the reversal starts off and then look to buy the leaders.
Okay, so that's the take coming in as far as the pharma sector is concerned. But Rajesh wanted your take, and this is a query coming in from Jay Krishnan from Kerala. He says that he has Sobha Industries at 719 and he had bought it for medium turn. But given the fact that the stock has corrected quite a bit, what should he do? Should he hold, or should he perhaps book his losses and exit?
Sorry. See, we have always maintained that reality as a pack is not for retail investors, because there are a lot of problems involved with the sector, be it of inventory, be it of high interest rate, be it of corporate governance. And we have always advised investors for going for realty ancillary companies like cement, steel, ceramic tiles, or even housing finance. But if somebody wants to stick to realty, Sobha, Godrej Properties, Prestige, these are some companies which stick out. I think one should continue their holding with Sobha Limited. It's just because of market things have fallen, and because of the kind of sharp run-up they have seen in the recent past. So it's better to be with the stock. Maybe 620, 625 odd levels would be a better levels to exit.
Okay, moving on, we have been discussing about the IT stocks, and Kunal K. Venugopal has a question for you. He wants to accumulate Infosys. On that, he wants to know the price that he should start accumulating that, and going forward, what could be the likely target price for him?
So you can start off maybe at a few percentage points lower than current level. So 1490 approximately is where Infosys is trading. You can start off maybe at around 1450, 1455 mark for Infosys, because that level could probably take the stock into a bit of an oversold territory, and then wait out for maybe another 50 point to 70 point correction. I think 1400 seems to be a major support for Infosys. The stock seems had bounced off from just below that 1400 mark, I think 3-4 months back. So which means that 1400 mark could be a very strong support. In case of the stock goes into a double test of the bottom of the previous support, there could be a high probability bounce for Infosys. So you can start off at a couple of percentage points lower, 1455 approximately, and then look to average maybe another 50 rupees to 55 rupees on the downside.
Okay, so that's the take coming in on Infosys. Rajesh, coming back to you, and this is a question coming in from Madhuri Balaji, and she wants a fundamental take whether Sharda Cropchem as well as BASF are good stocks for long-term investing or not. What's your recommendation?
See, I would go for BASF. That's a better company, I would say, for a long-term investment. Even one can have a look at smaller fertilizer company as such, because this being the last budget of the current government, maybe the focus would be on rural development, and BASF can be one good play. The other one can be Deepak Fertilizer or Coromandel International. So I would say avoid Sharda at this point of time.
Okay, that's the avoid coming in for Sharda Cropchem. But moving on, the next question, once again, Kunal, it's for you, because Anu wants to know a short-term view on IDBI Bank Limited shares. Anu has around 25,000 shares at a price of 59 rupees 4 paise, close to its 52-week high levels. But from those levels, the stock is drifting down. What will be your recommendation?
So I think over the last few weeks, I've been maintaining the stance that most of these mid-cap banking names on the PSU side specifically are into a deep overbought territory, if not an extremely or highly overbought territory. Now that indicates that these stocks may not just go into a time-wise correction, but they may also be prone to a very sharp price correction. So from 60 levels approximately, IDBI Bank has also corrected approximately 10% to 54, 55 where the stock is trading right now. My belief is that the stock may probably correct by another 4 to 5 rupees at least from current levels. So maybe closer to 50 odd levels is where I believe the stock may find the first level of support. So if you are in for some bit of trading over here, then maybe you can look to exit and then look to buy back again closer to 50 odd mark. But if you are okay to average, then I think closer to 50 levels is where you should look to average the stock.
Okay, Kunal, there's another question coming for you, and they're asking a technical view on JSW Energy. Indumati wants to know that she has JSW Energy at the level of 320, and she says that it looks oversold now. Is it a good time to average and expect a bounce back, or should one stay away?
No, so the stock can bounce back, but then I would not expect a very strong kind of a bounce back. So, you should always try and stay away from stocks which go into very slow, gradual sell-off, because then the intensity of sell-off could aggravate going forward. Now, for JSW Energy, the stock has broken the 200 DMA, the 50 DMAs, etc. in the last 2 or 3 weeks. It's broken below the psychological 300 mark as well, which has been a huge support for JSW Energy, I think, over the last 6-8 months. So, on the back of all of this point, I would expect the stock to drift a bit more lower. If you're looking to play for a bounce, then maybe you can play for a bounce, but then I think 300 should be at max the target on the upside. So the risk reward is not extremely favorable, because when you're buying an oversold stock, you're looking out for an ideal risk reward of 1:3 or 1:4 or higher. But in this case, the risk reward is just about 1:1 or slightly better.
Okay, moving on, the next query, Rajesh, is from Satya Veni from Vijayawada. She's holding IRCTC 500 shares at a price of 830. The stock has been in news recently on the back of OFS, as well as now LIC has increased its stake in IRCTC. How do you see this news for the longer term perspective? And she's also looking to average discounter. Will that be a good bet to go for that? And what could be the price that she should be looking out for?
See, first, we are very bullish on IRCTC from a very long period of time. Maybe from the IPO time, we have given buy recommendation. We still maintain our stance. The company is doing well. All the 4 divisions, be it ticketing, rail need, catering, or even tourism, are doing very well. With the kind of revenge travel we have seen, there are a lot of bookings going on, and we don't think there is any kind of competition going for this kind IRCTC in a near future. It's a virtual monopoly, cash-rich company, debt-free balance sheets. ROC is in double digits, 30% plus. EBITDA margin in 30% plus. ROC is also good. I think all parameters of a fundamentally sound company IRCTC had. The only thing it's stagnating for a very long period of time, but for a longer haul, by maybe for 18 to 24 months, we have a target of 850, 880 odd rupees. So if somebody wants to be in the stock for next 2 years, one can definitely accumulate.
One can definitely accumulate IRCTC. Kunal, let's talk about LIC. That stock was bouncing back sharply yesterday, and I would want actually both the views coming in here of the guest. But Kunal, first coming to you, the guest, rather the viewer, is holding around 300 shares at 770 rupees. Should they add more?
Well, I think wait out for a point, maybe closer to 700, 710 mark. I think the stock should correct back to those levels. That could be a point where you can look to initiate a buy. But yes, I think you should be looking to buy the stock. So, earlier, post the listing of LIC, the stock was going into a pattern of lower highs and lower lows, which means the stock was going into a downtrend. In just the last 1 month or so, the trends have changed. The volumes have been more higher on the upside. The stock seems to be breaking past about the previous resistances. So it's a pattern which has reversed from being into a downtrend to being a stock which is into an upward trend. Now, because the last 2 days the stock has seen a very swift kind of a rally, it always makes sense to wait out for a retracement. 710-ish is where I believe you should look to buy.
Sure. So LIC, Kunal is saying perhaps now it is looking a tad bit more attractive than at least what it was a couple of months ago. Rajesh, your take, LIC has been quite disappointing for the people who had bought into the IPO. But what's the take now?
See, fundamentally, they're a very strong company. The AUM which has is higher than the consolidated AUM, the entire mutual fund industry. It has a whole lot of real estate. The company is doing well. New policies have been doing well. The number of increase in insurance business is also very exciting. The only thing was valuation, and after this kind of correction, I think it's in a sweet spot. One can go long on this stock for a 1 year time horizon of maybe 850 odd rupees.
That's the fundamental as well as technical take when it comes to LIC. But viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back and taking more of your stock queries.
In the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's
Welcome back. Well, the market continues to be under pressure, and rupee update for you at the bottom of the screen, now weakening towards 83 mark as we speak. But let's get back to the queries as well. Satya CK wants to know what's the averaging price for Piramal Enterprises, because his first buy was 888, and similarly for ITD Cementation, his first buy was 135. At what level should he average, Kunal?
So I think ITD Cement, I'll start off with that. Maybe your averaging opportunity or averaging price could be closer to 115 odd mark. I think 112 was the major support from where the bounce started off for ITD Cement. So even if you look at a full-scale retracement, maybe 115 could be at best a good level where you can look to average. That's where I believe the stock should go into a bounce back. Piramal Enterprise, the stock has come back towards the 50-day moving average at current levels. Earlier, I think I had flagged off that closer to 910 mark or above 910 levels is where the stock could probably go into a bigger breakout mode. So if you're looking to buy the stock, you can buy at current levels, but then average back again only about the 910 mark whenever that breakout happens for Piramal.
Okay, so that's the take coming in on both these counters. But moving on, the next question for you, Kunal, as well. Venkat has written to us. He's holding, he wants to know the view on DMart. He says that this particular stock has been quite range bound recently. But going forward, any intraday opportunity that you are looking out for that, and which side it could be? Intraday might be a tough one to guess on, but going forward, any positional bets on DMart?
So not really. I think again, as I think the viewer rightly highlighted, that the stock has been consolidating. The range for DMart is just narrowed to 200 points. So 4,180 or 200 is the range for DMart. It's exactly at that midpoint, 4,100 currently. So which means that the trading opportunity over here would be just 1:1. So unless the stock comes back towards that 4,000 level, I don't sense that you should probably look to initiate a trade. But yeah, I think closer to 4,000 level is where you can look out for maybe a 200-point bounce, keeping a stop loss of 50 odd points.
Okay, so watch out for 4,000 on DMart. Rajesh, Natarajan Ramesh wants to know whether Action Construction is a good stock to buy with a 2-year horizon.
I don't think so. Maybe on a correction of 20-25% from the current market price can be a good buy. But at this point of time, I think valuations are fully priced in about the kind of growth infrastructure is going to witness in the near future. A price closer to 270, 280 odd levels would be a good entry point for Action Construction.
Okay, moving on. The next question, Rajesh, is for you. Pratiksha has written to us. She is holding RITES at a price of 380 rupees, currently at a loss, but going forward she can hold this counter for the next 2 to 3 months. She is also looking to average out. What will be your advice on this?
I want to suggest averaging out because we have seen in the past too that railway stocks try to outperform prior to budget, and after the budget they go into a long consolidation mode. Rather, I would say if you get any kind of bounce, try to exit the stock. If you are trying for a long haul, you can buy after the budget when it corrects. So at this point of time, it's a sell on exit kind of thing, sell on rise kind of thing.
Sell on rise, that's the word coming in for rise. Kunal, Mohit Narang wants to know, should he book profits in Titan? Now, he hasn't mentioned his cost of acquisition, etc. But chart-wise, do you see upside on Titan?
Well, I do see upside on Titan. In fact, the stock has hit back towards a major support zone. See, on daily charts, it's come back towards 200 DMA, which has been a very good support point for Titan. And even on the hourly charts, the indicators seem to be coming back into deep oversold territory. So it could be a matter of few days. Maybe the stock would consolidate for the next couple of days, but then eventually I think the stock should go into a very strong bounce back. So if you've already bought, you are sitting in profits, I think you can stand out for maybe another 5% on the upside. So closer to 100 rupees upside from current levels is where you should look out for a target on Titan.
Okay, the next query is from Subhashni and Kunal. He's holding ICICI Lombard at a price of 1,260. In the past 1 month, the stock is already up 10%, but his purchase price is higher than the current market price. He wants to know the view for the next 3 months.
I would suggest a hold on ICICI Lombard. Now, I think most of the insurance stocks are making a very strong comeback, and particularly referring to the likes of SBI Life, HDFC Life, etc. I think these stocks have done reasonably well in the last 2 months. Even ICICI Lombard, I think, has recovered more than 12% or 13% from 1100 mark to 1230, 1240 levels right now. The stock is consolidating above the 200 DMA. That's also a very good sign, forming a bullish pennant formation. The Bollinger Bands have contracted. So a lot of technical indicators suggest that post this consolidation, the breakout should be on the upside for the stock. In that regards, I would suggest a hold.
Hold on ICICI Lombard. But Siddesh Vairagi wants to know, Rajesh, whether SBI Life at 1,200 rupees is what he has. Should he continue holding or exit?
One can continue to hold. The company has been doing well because of its parentage. It has got good client base. The numbers have been quite well. Life business is doing very well. New business has done well in the past 2-3 quarters. I think one should continue to hold with a target of 1,400 rupees.
The next question is once again for you, Rajesh. Gopi wants to know your take on L&T Finance. He's looking for a long-term investment out here. What's your take on how the fundamentals can shape for this particular counter?
So despite a good company with strong fundamentals, this stock has done nothing for the investor since its listing. It has been a long consolidation. It's been a gross underperformer, and I don't think in the near future it can do any wonders for this. Better one should switch, think of buying Bajaj Finserv or Poonawalla Finance in this space. Even AB Capital is a good stock.
Rajesh Maheshwari from Indore wants to know, Kunal, whether Tata Elxsi is a stock that he should enter at the moment. It's seen a substantial drop. Should he wait or a good time to enter?
No, I think you should completely avoid the stock. In fact, over the last 2 months, I've been specifically voicing the opinion that to avoid Tata Elxsi, because the stock is not just going to a mean retracement, but the stock is going through a very sharp corrective phase, which could last for some more time. The volumes for the stock has not increased up higher, so till the time you don't see a bunching up of volumes where the prices fall very sharply and the volumes shoot up higher, till that time I think you should try and avoid buying the stock. Maybe another 15% to 20% on the downside is where I believe the stock should find some good support, but not at current levels.
Okay, moving on, the next query for you, Rajesh. Shubham has invested in 3 pharma counters, and all of these 3 names have been big wealth destroyers for 2022. He's holding stocks in Gland Pharma, Supriya Life Sciences, as well as Laurus Labs, and currently having a loss of over 25%. What's the horizon? He wants to know that he should stay invested in all of these counters to recover a bit, and what will be your advice on that?
See, as far as the advice concerned, I think Gland is a good stock. It's just facing bad times because of its promoter trying to exit the stock, and that's the bad news. Otherwise, if you look at the business, injectables has been a very good business. It's one of the leading companies in that. Going forward, if that overhang goes away, I think this can give very good returns. For a long haul, I think Gland Pharma is a good stock. Even Laurus, which has corrected quite a lot from its highs, is having good amount of portfolio of new launches. The capex has been done. For a long-term horizon, these 2 are good. Accumulate at this point of time. If for short-term, I think short-term one should avoid, but for long-term one can accumulate.
Patience is the name of the game when it comes to some of those pharma counters. But Rajesh, we have a guest who wants to know what to do with Nykaa, because it's now sitting at the record low levels per se since its listing. What should one do?
See, it's a very difficult take because people have different kind of risk appetite, and somebody willing to take risk in the new age companies which have been running short of cash in the near term. I think Nykaa is one of those stocks which stands out because 1, the bottom line is positive. 2, they are not only online, but they are moving into offline also. 80 stores in 40 cities. But again, I would like to reiterate that these kind of stocks are only for those investors which have a higher risk appetite and a long-term horizon. So if somebody has a long-term horizon, maybe a 5 to 6% of your portfolio can go to these new age companies, and one of these is Nykaa.
Taking the next query from Sukhwinder and Rajesh, he is looking to invest into Zee Entertainment as well as Shriram Finance at current levels. He wants to know whether he should enter these counters with a 1-year investment horizon.
See, Zee, I would like to say avoid at this point of time because there are a lot of corporate restructuring, takeovers, mergers going on in the near future. Maybe Sony is going to merge. I don't know what's going to happen, but it will take some time before something concrete happens. So maybe if you are looking for long-term investment, 10-15% correction from the current levels would be a good entry point. And the second one you said was?
Shriram Transport Finance.
Yeah, Shriram Transport, one can look at it because of its truck hire business that's doing very well. NBFC is doing very well. One can look at a target of maybe 1,500 odd levels in the next 1 year.
Okay, Kunal, there are questions coming in on UCO Bank as well as Yes Bank. Very tricky. We have seen very volatile moves on these counters. What should an investor do?
Well, I would suggest to avoid Yes Bank. Now, even though the stock has done reasonably well, but then purely on the charts, I would sense that it could be a point where the stock may go into a sharp correction. UCO Bank, on the other hand, I think maybe closer to 25 odd mark or 27 odd mark, the stock would complete more or less a 30% retracement from the previous major swing highs. So I think that could be a reasonable level where you can look to buy. So a buy and dips is what I would recommend for UCO Bank, but a complete avoid on Yes Bank.
Okay, but moving on, viewers, it's time to kickstart a rapid fire session. The first query for you, Kunal. S. Chatterjee wants to know the take on ICICI Bank. He's already holding 1,000 shares at a price of 770 rupees.
I think it's a good time to book out profits over here. Then if you're looking to buy back, maybe closer to 840, 850 levels is where you should look to buy back.
Rajesh, what's a good entry level for HAL for a medium-term perspective? Hindustan Aeronautics.
Maybe 2,500 would be a good levels, but I would say wait for the budget to go away. Then after that, enter into these kind of stocks.
Okay, Rajesh, KP Hari wants to know whether it's a good long-term bet for IRFC, South Indian Bank or Manappuram Finance. Any of these counters you're liking at this point in time?
Avoid all three at this point of time.
Kunal Hikal, the buy price has been pegged at 380. What should they do? Average or exit?
Continue to hold.
Okay, Rajesh, Ramesh from Kochi wants to invest for long-term in Power Grid and Tata Power. What will be your advice?
Tata Power is a buy.
Natco Pharma, Kunal, 104 stocks at the price of 600 rupees. Is it good to accumulate at current price with a 1 year horizon?
Would suggest a hold as of now. Maybe closer to 500 is where you can look to average.
Okay, Kunal, Ganesh Gaikwad is already holding Wipro from a price of 550 rupees. Now, is this a good time to average out?
Not really. I would suggest a wait.
Kunal, SKM Industries, the guest has bought it at 98 rupees. Should they sell now?
Yes, I think good time to book profits.
Okay, Rajesh, the next question from Mr. Lokhatia. He's a long-term investor and he's looking to invest in SCI. What will be your advice?
SBI is a buy.
Rajesh, it's SCI, Shipping Corporation of India.
Sorry. That's also a buy. Maybe a target of 160, 165 is quite achievable.
Kunal, not sure do you track this one, but Polyplex and the cost of acquisition is 1780.
You can continue to just hold on. No need to average as such.
Okay, Kunal, the next query is for you. I can't see the name of the viewer, but he's looking to invest in any of these FMCG counters for the next 1 year.
I would suggest Marico and Britannia.
Rajesh, is Motherson Sumi a good bet for long term?
Yes, of course. Once the recent things is taken back, I think this company can do well.
Okay, viewers, it's wrap with this rapid fire session. But with this, Rajesh and Kunal would like to thank you for joining us today on ET Now and helping all our viewers with their stock queries. But with this, it's time to slip into a short break. But viewers, don't go anywhere, because coming back, we'll be taking up it right ahead with more stocks and news flow.
It's not impossible, it could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible, it could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
we continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
Well, the slide in the market is actually aggravating as we speak. We are threatening to go below the mark of 18,200. As we pointed out earlier, this is in response to what's happening across the globe. Because if you look at Nikkei, that is sitting with a cut of almost 3 percentage points at the moment. The US futures are suggesting a downtick of around 200 points. And the Nifty now drifting towards the lowest point of the trading session, 18,200, getting threatened at the moment. But 2022 may have been a choppy year with largely flat returns amid recession risk. Foreign flows remain turbulent, but one category that has shown resilience in the market has been the domestic retail investors. Sharad is now joining in to tell us how the trends have really panned out.
Well, yes, a very strong, resilient performance by the retail investors in the year 2022, despite the volatility in the markets being seen. Now, over here, if you see the SIP levels at their lifetime high levels of more than 13,000 crores, and this is being sustained for the second straight month. Now, going ahead also, if you look at the numbers, especially the demat accounts, that has also been crossing the 10 crore mark. And if you see the retail mutual fund folios, that has also been very strong, and that is going up more than 11 crore, and it's going really strong. And the additional happening across the month, that is also pretty good. Even the SIP accounts, that is also coming in at record levels, and it has touched the 6 crore mark, and that's a very big number, especially for the retail investors, and seeing this in a volatile year of 2022. Now, the retail AUM numbers, if you see, that is also going up. And it's almost more than 20 lakh crore rupees, and that is also coming despite some corrections seen in the middle of the year as well. Now, apart from the retail AUM, let's see how the DI's cash flow markets has compared with the FIs, and over here we see there has been a change from 2020, and you see the DI numbers going up more than 2.5 lakh crore rupees already for the year 2022.
Well, moving on, good news for all the Mumbaikars, because soon Mumbai roads will be free of potholes. BMC has floated tenders for concretization of Mumbai roads, and ET now has learned from the sources that financial bid for the first phase of rupees 6,500 crores project will open this week. Many big companies like NCC, Megha Engineering are among the bidders. Ankur Mishra has more details on this particular news. Ankur.
Yes, 4 to 5 big players are in fray for concretization of roads in Mumbai. What we have gathered is that the companies like Nagarjuna Construction Company, Megha Engineering, Eagle Infra, Dinesh Chandra R. Agarwal Infracon are among the players who have submitted bid for this contract. Now, this contract was floated by BMC, and the idea was that after cancelling earlier contract of 400 kilometers construction in Mumbai. BMC had floated a new contract, and for that these new bids have come. This contract is worth rupees 6,500 crore and the timeline for the new winner will be given for 18 months to complete the whole project. We also learned that BMC is likely to float another contract of between 2 to 3 months and the whole work of concretization of roads in Mumbai will be completed in almost 2 years. As you remember that Maharashtra CM Eknath Shinde had announced that he wants to keep the city without potholes within 2 years. So we will see that these listed players have submitted the bids for the contract, and this week itself BMC is likely to declare the winner who will be constructing these roads in Mumbai.
Thanks, Ankur, for that. Call me a skeptic, but I wouldn't believe the fact that Mumbai can ever be pothole-free, but I'll be glad to be proven wrong. Yeah, I'll be too glad to be proven wrong on this one. Let's see whether that happens or not. 2 years time frame is what we have to wait for. With that, completely out of time on this edition of Buy Now, Sell Now from the entire team. Thank you so much for watching.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.